Now, the 80-20 rule comes from what is commonly referred to as the Pareto principle, but was made famous by this book by Richard Koch, the 80-20 principle. And this book was written, I don't know, years and years ago, and you could see all the pages are yellowed, and I underlined just so many pages in this book you can't even see where you can't distinguish the underlined parts from the non-underlined parts. It had that much of an effect on my life, and I want to share with you some principles from this book and from the concept of the 80-20 rule that I think apply to us as traders. And in particular, we're going to ask some big questions today. But before we do that, what I'd like to do is take a look over here at this graph or this chart. Now, on this graph, what you have is you have profit on this side over here, and you have effort on the bottom area here. And you can imagine that there is some kind of optimal combination of effort that we put into our trading that leads to a certain amount of profit. And the general idea is that more effort leads to more profit. And so it would look like this. That your money would go up as your effort goes up. That's the general idea. That's how we generally talk about trading, or we generally talk about all kinds of success. Made famous and popularized by Gary Vaynerchuk and hustling or whatever. And there's this culture spreading throughout Silicon Valley and all throughout the financial world, everywhere really, that the more work you put in, the more money you're going to make. And this principle or this idea has caught on because it makes logical sense. It makes logical sense to us that if we work really hard and we work harder, then we deserve to make more money, that it's fair. Well, if you think about it for more than 35 seconds, you realize life has never been fair. And it's never been true that the people who make the most amount of money on Wall Street, for example, are the people who have worked the hardest. That's never been true at all. In fact, it's probably not true at all. And that's the 80-20 principle, the 80-20 rule, which is that the majority of our profits are going to come from a minority of the work that we do. Or some of the smallest things that we do or put an effort into lead to the most amount of profits. In fact, I think that the real graph looks like this. I mean, you can't put, well, I'm not even going to say that you can't put no effort in. I'm not even going to say that. I'm going to propose today that by asking these three main questions that we're going to get to, that you're going to realize that the less effort that you put in leads to more profits. And in fact, to the point where you put in the least amount of effort and get the most amount of profits. I would propose that not only will 80% of your profits come from 20% of your efforts or your decisions, I would propose that 51% of your profits, or more than half of the money that you make as a trader, will come from 1% of your decisions or your efforts. Now, I'm going to describe that to you inside of these big questions, and let's just get right into it. There's no reason to delay. Let's just jump right into it. I'm going to read you a section from this book that I think will illustrate this point and set the tone for the rest of what we're going to talk about. The pages in this book are actually coming out because I've read the book so much. We saw in chapter 5 that simplicity requires few products. So when applied to businesses, the author of this book proposes that one of the most important strategic decisions that a business can make is to cut down radically on unprofitable products. That a few products in the business are going to represent the majority of profits, and a few products in the business that aren't working well and aren't selling well, or that command a huge amount of expenses, are going to account for a significant loss of profits. Not only does the 80-20 principle work in the sense that 51% of your profits are going to come from 1% of your positive efforts, it's also true that 70+% of your losses are going to come from, I would say, even 0.5% of the decisions that you make. If you think about it, if you could take away your single largest losing trade, you would be great. You would probably be doing spectacularly well as a trader. Well, that means that, once again, the 80-20 principle, or something even more extreme than the 80-20 principle, strikes again, that a significant portion of the money that we lose as traders comes from small decisions that we make or small things that we do. So the first big question is, what were my biggest losing trades? What were my biggest losing trades? And Warren Buffett says that a lot of success is about not making stupid decisions and is less about making a lot of smart decisions. That if you can cut out some of the worst decisions that we make, the worst irrational decisions that we make, the worst illogical decisions that we make as traders or investors, that's going to solve a significant amount of the problem. And I totally agree with this. This is absolutely true. That if we can cut down on the things that led to our biggest losing trades, we're gonna solve most of the problem related to income and losses in our trading. When I answered this question, I got two answers from this. Following other people. So just following in general was a bad idea. I would see something published on Twitter by someone really intelligent or smart or otherwise spectacular, but by following that advice, I did really badly. The other thing was basic discretionary trades with a large size. I know that text is really small. Two things: following other people and following their decisions, and taking discretionary trades with a really large trade size. Every single losing trade that I ever had that was a significant loss in my account came from those two things. And so I immediately made a decision that I was going to stop following other people. I was going to stop following other people's trades, even if that meant that I was going to miss out on something. I would just let go of the fear of missing out. And then the second thing was, I was going to stop taking trades with large trade sizes. Well, guess what happened? Immediately, my trading performance improved. This isn't rocket science. I know some of you that are watching are like, okay, that makes perfect sense. I already knew that. Okay, great. I'm not speaking about anything revolutionarily different. I'm actually reading from a book that somebody else wrote years ago. Okay, the second thing is, and you can see this one coming, you ask the question, what were my biggest winning trades? So you think about your biggest winning trades, or your most consistent trades that have even small wins that are compounded over time. We tend in the world of trading to gravitate toward the idea that one big trade is going to solve our problems or fix our account. And I fall for this all the time. I actually am partially responsible for propagating that kind of discussion. And it's not necessarily untrue. If I'm taking fewer discretionary trades and I'm not following people anymore, and I'm patiently waiting for maybe 1, 2, or 3 really big trades per month, and I'm focused on that, and I take those big trades with a really small trade size and then add to them if they become winners, well, actually, that's a pretty spectacular way to have massive improvement. In fact, if you focus on maybe 1 to 3 really big trades in your account, maybe on a monthly basis or even a quarterly basis, and you hang on to those trades when they do well, and you add to those trades when they do well, you're going to get more than half of the profits that you used to get, but you're going to expend a lot less effort. You're not going to be day trading or whatever else. Or you could look at what the most consistent small wins, you can look at what the most consistent method is that you have for producing small consistent wins. And those wins compound and accumulate over time and become something absolutely spectacular. You ask that question, and then what you do is you absolutely insanely focus on this stuff. And you drop everything else. You don't need, okay, once again, I'm going to read from the book. Upon analyzing the data, the rule held true. They were analyzing businesses and looking in their warehouse and looking at their inventories and looking at their SKUs or their product lines to see what product lines were most important. A preliminary study showed that the 80-20 rule didn't fit. Rather than 20% of the SKUs, the SKUs, those product identification numbers, accounting for 80% of warehouse activity, only 0.5% accounted for 70% of the business's sales and profits. In other words, most of us are trading too many systems and too many methods that are unnecessary for our success. Number 3. I'm going to put 5 exclamation marks, and I'm going to put some right here for all of those of you that speak Spanish. Ha, ha, ha. Automate as much as possible. The third big question is, how can I automate this? How can I automate my biggest winning trades, or semi-automated? How can I automate my most consistent trades? What can I do to automate as much as possible? Now, what I did and how I went through this process, I realized that my discretionary trades were killing me, and I realized that following other people was killing me. So what I did was, I stopped doing that discretionary trading, most of it. And what I did was I started running my robot called the Finch, which is not perfect and has its problems, but it counts for the most consistent wins over time. And what I did was I started running this robot, and then when the robot would have problems or go through a losing streak, I would jump into some of those biggest winning trades. And because I wasn't obsessed with day trading and my mind wasn't fried from looking at all that day trading, I was able to turn my trade. Well, I didn't turn it around. I mean, I was still making money, and I was just expending less effort to do it. So I went from a trading career where I was making, let's say, a lot more money, to a trading career where I made less money with less effort. And that less effort gave me time to do the things that I wanted to do. And with that less effort, it freed me up to think about the biggest winning trades that were out there, which led, in fact, to an eventual increase in my profits. So by automating as much as possible, I was able to stop doing the stuff that wasn't working, start doing the stuff that was working consistently. And when things broke down or became a problem, my brain wasn't fried from staying up all night looking at short-term trading, and I was able to plan out some really big trades. And I had a combination of things that required significantly less effort, but produced most of my trading profits, or at least more than half of my trading profits. In other words, what if there was a choice between having 51% of the profits that you could have as a trader? So let's say that you were making $100,000 a year as a trader. What if you could make $51,000 a year, but you could start doing it with only 1% of the time expended and effort expended that you used to do? For some people, that makes sense. Now, for some of you, that doesn't make any sense. You'd rather just work really hard and put a lot of effort in and try to have the 100% of profits. Well, here's what I've learned in 17 years of trading. This 100% of effort and 100% of profits is not sustainable. What happens is people break down, people get tired, people get exhausted, people start making mistakes on discretionary trades. And one single bad decision can take all of that away. And so for me, it became not a choice between 100% of my profits and 51% of my profits. It became a choice between accepting a significant amount of profits for a significant less amount of work and retaining my sanity. That's what it was. That there wasn't some other option out there to triple, double, quadruple, quintuple my income and have some spectacular performance. The real question was, what's sustainable over time? And if I'm making maybe half the money I was making with less effort, that frees up my time to explore other business opportunities, other trading strategies that I could add to the portfolio, and I'm not going to be burned out on all the other trading that I'm doing. So thank you for joining me. Hey, it's Rob Booker, everybody. Thanks for watching this video. If you want more great content and you're on the Booker Wealth site, go to the bottom right of this page and just watch more videos. I got a ton of them. Or if you're on the YouTube channel, just hit that subscribe button and the bell, and I'll let you know when I make new content. I love you all. Have the best day ever.